let's go ahead and while I'm asking a bunch of questions, let's go ahead and share this thing. Okay. All right. So you should be able to see my desktop or a slide that says "Finding the Right Strategy for You." Can you guys see that? Just let me know that you can see the screen. And we'll go ahead and get underway. Okay. Thanks, Kent. Thanks, Vince. Thanks, Katrina. Well, let's go ahead and get. I'll start with a little introduction to me. I started here. I've been working here for about 20 years. It's been a job. Eric, you might want to mute your microphone. I started here in inside sales. Right now I'm in charge of our business-to-business network and our dealers worldwide. It's a lot of fun. Work with a lot of people like Fausto, and it's a lot of fun. I really enjoy it. It's been a great job. Very grateful for it. All that kind of good stuff. So let's go ahead and get to what I need to read next. Our legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the company's software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So hopefully that won't be the most exciting part of the class. And we got it done. In case you're not familiar with MetaStock, I'll just tell you a little bit about that. It's a company that's been in business since 1982. When I started, which was about 20 years ago in March, if you can believe that, it was a wholly owned part of Thomson Reuters. And a couple of years ago, we decided it was going to be a good opportunity for us to kind of buy ourselves back from Thomson Reuters, so that's what we did. We still have a really good relationship with Reuters. We still use all of their data. We still get all of their news. And it's been a great company. We've been able to really, really grow the business, even in the time that I've been here, in the short 20 years I've been here. So one of the things that we are proud of is every year since, I looked it up yesterday, every year since 1992, we've actually been rated #1 in Stocks and Commodities magazine as the best software price category. And that's literally the last thing I'm going to pitch about MetaStock. Want to kind of get in and talk a lot about analytics and finding trading ideas and explaining trading ideas and kind of figuring out really what's going to work for you. So let's go ahead. That's really what we're going to talk about today, is how to evaluate trading methodologies for what I would say your risk-reward zone, your personal lifestyle. Like for example, I've got 3 kids at home, a wife, a very, very full-time job. So I don't really get as much time. I can kind of sneak in a little bit of time during the day as long as I'm not too busy to sneak a trade in here or there. But that's obviously my situation. And so when I'm looking at systems and how often they're trading, that's something that I have to keep in mind. I'm not really actively super day trading. I'm more of a swing trader. Usually hold positions for a couple weeks to a couple months. And so depending on how much time you have to trade will depend on kind of the systems and the methods that you want to look at. Obviously, risk reward, you want reward. You don't want to take a lot of risks. Those type of things are fairly self-explanatory. And there's a lot of good ideas out there. So there's one slide I actually accidentally hid. Let me go unhide this slide over here real quick. I didn't mean to hide this slide because I think this is important. Let's see. Give me just a second. All right. You guys all know, well, most of you probably know who Richard Dennis is. This book, The Market Wizards by Jack Schwager, is a really good read. I'd recommend it. But there's a little bit of a part in there by Richard Dennis. And if you're not familiar with who Richard Dennis was, he's a famous trader in the 70s. They started the Turtle Traders, which is a long story what they are, but I'm not going to go into it. But they basically kind of set up a bunch of traders, taught them their trading rules, and put them out there in the market, and it was incredibly successful. And this is a quote that I think kind of speaks to a lot of what we're talking about today. I always say that you could publish my trading rules in the newspaper and nobody would follow them. The key is consistency and discipline. Almost anybody can make up rules that are at least 80% as good as what we taught our people. What they can't do is actually give them the confidence to stick to those rules even when things are bad. And I just like that quote. I think it's important to kind of talk, because what we're going to be talking about is rules today. We're going to be talking about looking at rules and evaluating rules and hopefully coming something that's 80% as good as what was in the Turtle Traders. But the other thing that you want to keep in mind is discipline and not trading with emotion and all that kind of stuff. So in any case, that's the only quote. What I'd like to kind of talk about this class, I'm actually going to teach a trading methodology today. We're going to talk a lot about MACD and the MACD indicator. The reason I do that is might be a little bit basic for some of you that are in here, but I think it's important that you understand what a trading system is, especially if you're trading with it. But I think it's important that you understand it, in theory, what a trading methodology is. And trading methodologies are all built on MACD, or indicators, I should say. And I think a good, simple strategy to teach is actually MACD, which was, of course, created by Gerald Appel. And it's a very simple calculation. So let's go ahead and switch over to that. I'll kind of talk a little bit about how MACD is calculated and how people use it in kind of to make trading decisions as well. So MACD, let's just go ahead and kind of talk a little bit about how it's calculated. Right here we've got the indicator quick list for MetaStock. There's a couple hundred indicators in here. MACD, I'm going to actually, we'll go ahead and add that right now. I'm going to go ahead and use a 9-period signal line. And what I'm going to do is I'm going to actually show you how it's calculated, because it's fairly simple. Let's go ahead and throw a couple of moving averages on here. We'll find moving average on here. I'm going to do a 12-period exponential moving average and a 26-period exponential moving average. Okay. And I'm going to highlight these differently. With MetaStock, I can highlight these differently just by double-clicking on them. I'm going to go ahead and make this blue. I'm going to make it a little bit thicker. I just like it to have a little bit more weight on the chart. I'm going to actually do that with this one. I'm going to leave it red, but I also like to have it maybe a little bit more weight on the chart. Okay. So the calculation, the way Gerald Appel calculates the MACD is, I'm going to change this into a histogram too. So again, anytime you want to change something in MetaStock, just double-click on it. Just going to double-click right here on the chart, on the indicator. I'm going to go ahead and go to parameter or color style, and for the style, I'm going to make that into a histogram. I'm going to go ahead and apply this. Oh, by the way, guys, if you have questions as we go through it, I will answer them. I'm going to do my best. If I miss them, go ahead and ask them again. But I'll do my best to pay attention to the questions and kind of take my time as we go through this stuff and that kind of stuff. Katrina says a 26, and what was the second one? A 12-period moving average. Both of them exponential. Okay, so this line right here, the histogram line, you're welcome. You're welcome. This line right here is really just the difference between this shorter period, or the 12-period exponential moving average, and the longer term. Okay, that's it. That's what the MACD gives. So if we're just looking at the red line here, and we would just subtract this value from this value, what you're going to get is, in this particular case, 0.79. Okay, and they call MACD a trend and momentum indicator, and because it's a very good indicator of measuring not only the trend as the stock starts to go up. You're going to have a positive MACD value because the stock is starting to rise and it's starting to separate from that longer term moving average. It's also a good measurement of momentum, because as you're in a kind of a deeper trend, you're going to have a much bigger MACD value. And as that trend sign that starts to go sideways like it does right here in the chart, you'll notice that you don't get quite the peak and trough in a sideways market is when it starts to trend in a certain direction. So they use it, it's a measurement of trend and actually also momentum. Okay? And so once you understand that, it's pretty easy to follow. Right now, and whenever you see your MACD starting to fall down, it's going to correspond directly with the price actually falling down. Okay, and so people interpret this in 3 different ways. I'm going to go through all 3 ways that you can actually interpret a MACD indicator. Okay, The first one uses the signal line. This signal line right here is the blue line that's on the chart. Okay, I'll make it a little bit thicker as well. But it's called the signal line because, and it is a 9-period moving average. Okay, I believe it's also exponential. Let me just double check real quick here. Yeah, I believe it's exponential. It doesn't say right there, but I believe it's an exponential moving average. I'm pretty sure. I'd say 90%. So the way people would trade this, if they're looking at this as a signal line, is they'd wait for the MACD to cross down below this signal line. Okay, and as long as it's down below its signal line, as it is like right in this area, then you're bearish on the security. Okay, when it crosses back up above the signal line, like it does right here, then you're going to be bullish on the security. Okay, and in MetaStock, I'm going to actually attach our MACD expert advisor. And we can kind of see that in a trend ribbon here. Down at the bottom, you'll see bullish, bearish, bullish, bearish, bullish, bearish. And it's just basically telling you that the MACD is in a bullish or bearish state. Okay. If you're trading this using this signal line, it's a pretty simple trading system to use. Basically, if it goes let's say right here, it actually dropped down below its signal line and went bearish. Well, if we go from bullish to bearish on a security, what's our anticipation? Our anticipation that it's starting to be bearish. It's more likely to fall than it is to rise. So when that starts to happen, what we're going to do is, just trading it in a very simple way, is you're just going to take a short position on that chart. Okay, and I can come in here and we could put a little short, like a little arrow on the chart saying we're going short based on that rule set. So that's one of the ways people interpret it. And it's actually the way that we're going to test it when we go back and do some testing on the market. But I promise to talk to you a little bit about how the 3 different way people interpret the MACD. The other way, the other 2 is overbought, oversold, as an overbought, oversold indicator. So as the MACD gets to an extreme level, either to the upside or to the downside, it's obviously an extended trend point, and that you could use that as a reversal indicator. So in other words, right here we've kind of got an extension. The expert I just attached to the chart is actually showing an extension, so we could be anticipating a reversal at this point and be kind of looking to front run it. So you can use it as an overbought, oversold indicator. And the third way people actually look at this as a way to trade the security is to look for divergences. Okay. So, and the way you kind of do that is you look at kind of a high point in the MACD or a low point in the MACD if you're looking at the bottom of it. And what you're looking at is you're looking for a divergence between those price activities. So let's take these troughs, for example. It's a little easier for me to explain it if I draw it out. When I take a line from here to here, okay, this is the trough of this MACD, and this is the trough of this MACD. And you can notice that the trough was not nearly as significant right here as it was right here. Much different, right? And if I take the same trend line and draw a trend line from the low of the price activity, okay, you can notice that they're kind of pointing in the same direction, okay? Although obviously this is not nearly as strong, but they're not diverging, basically is what we're saying. In this particular case, a divergence is if price would have come down here and yet this is rising. That's what people would call a divergent signal. That's in this case where we're looking at the troughs, it's a very, very bullish signal. In fact, one of the people I really respect in the market, Dr. Alex Elder, basically calls this the most powerful signal in technical analysis, is when you find this kind of a separation pattern between your MACD. It's not happening here. It's something that the software will look for, but it's not happening in this particular example. In this case, you'll notice that we did have a huge bull run up here, but there's not really necessarily a classic divergence pattern right there. But that is what you would be looking for, is kind of a new low in price, while a new low in MACD is not made for a bullish divergence. Okay, does that make sense so far for everybody? Okay, don't see any questions? I am. Let's make sure I'm at the bottom of this question list. Okay, all right, cool. Now, Before I kind of talk a little bit about how to kind of test these ideas and stuff like that, I just want to show you kind of some cool stuff in the software. I did draw this buy and sell arrow on the chart. Before I kind of started the class, I actually turned off a few parts of this expert advisor. So if I come back in here, I'm going to turn it back on. I just wanted to show you the bullish bearish ribbon as we went. But I'm just going to go ahead and turn on back on the buy and sell signals. So we'll go ahead and click on this. By default, these are on. Okay. And now we can see exactly where those sells and buys would have come based on the cross of the signal line. Okay. The other thing that's pretty cool about the expert advisor is I can come in here and I'm just going to open up the expert commentary window, which will open up a little bit of an overview. And the expert I'm looking at right now is the MACD expert advisor. Okay. So it's looking at the MACD. There's a lot of other ones that are built in. There's ones built on candlesticks. There's a turtle trading one. There's probably about 40 different ones. But this is basically telling us a little bit of what's going on in the MACD. Currently, and it kind of looks at those three things that I was talking about, looking for the crossover. Currently, it's bullish since it traded above its signal line. The MACD crossed above its signal line 3 days ago. Since the MACD crossed above the signal line, it's actually gone down a little bit, 1.73%, and it gives you a little bit of a range. Right now, it's saying it's not overbought, oversold, and there's no divergence. There's been no divergence in the last 5 days. So I'm going to give you an idea of kind of what's going on. This will change every day. Like if we kind of come back here to like this green area I pointed out earlier, where it's looking for overbought, oversold, it'll basically tell you. And I just moved this arrow over. You can do that by just clicking on the chart. Well, on that day, it's going to tell you that the MACD is currently in oversold range. Prices may continue to move lower for some time. Wait for prices to move higher before considering a long position. So it's giving you, hey, we're oversold right now, but it could continue to go down. But we're looking for a reversal point at this time, a reversal trigger. So, and anytime you see divergence, these are all things that you can scan for, which we'll talk a little bit when we get into scanning of this. Okay. Cool. Awesome. So that's expert commentary. And now we'll talk a little bit about why I think it's important to test. Okay. If we come in here into the MetaStock indicator quick list, there's like 200 indicators. I just spent, well, maybe 20 minutes. I actually went a little bit fast today, but I spent maybe 20 minutes talking about MACD, right, and just explaining to you the different ways that you can look at it and stuff like that. Certainly, if you wanted to go through and kind of learn about all the couple hundred indicators that are in MetaStock, it'll take you a little bit of time. There's no question about it. And you'd learn a lot of stuff that you don't really practically need. For about 10 years, I worked in inside sales, which meant if you called in, there was a good chance you're going to talk to me. But one of the things that I fell into a trap of a little bit is just talking too much a little bit about the program. You know, you can go in there and say, you know, there's 9 different charting styles, and there's expert commentary, and there's 40 systems, and there's 200 indicators. And pretty soon people will be like, well, where do I start? And I think that's why I like to kind of talk a lot about system testing. Because if you're like me, I like to kind of focus on the stuff that works. In other words, I couldn't care about the 200 indicators in MetaStock. I want to know about the ones that are going to help me in the instruments that I want to trade. I want to know which ones have worked well historically. And then that way, what I can do is, I think it's, like I said at the top of the session, I think it's important to understand why you're taking a trading decision and understand why you're getting a buy and sell signal. But by being able to see which indicators work, it allows you to focus the education that you've got. And it also helps you with the discipline, because if you know, okay, I found a trading system that works 9 out of 10 trades, has drawdowns, they usually look like this. It helps you kind of understand and prepare for the drawdowns that you're inevitably going to have with any trading system, and to understand what your risks, rewards are. But I'm jumping ahead a little bit of myself. Really, right now, what I want to do is I want to say, okay, I'm interested in trading Apple, IBM, Microsoft, or maybe it's ETFs. Maybe it's Forex instruments, maybe it's futures, whatever it is that you're interested in. Because we get our data from Reuters, you can trade anything you want to. How do I understand which methodologies are going to work best with my requirements in mind? how often I want to trade, how much risk I'm willing to take, those type of things. And we call that, of course we do that, and we call it system testing. So I'm going to open up our Power Console here. I'm going to come back into the system tester, which is just this option right here. And we'll throw in a couple of securities here. And in fact, if you have some securities that you would like to look at, type them in. We'll do like 3 or 4, so you better hurry. We're going to start with Apple. You know. Now, I want to point out, while you're typing in some symbols, because we'll just throw them into the system test here, I can come down here, and on this instrument list, if I wanted to, I could say test all the ETFs. Just test the whole basket of ETFs. I can do that. Okay. I can say, well, I'm an options trader, maybe test all of the optionable stocks. I could do that. Or I could do both. Okay. Yeah, I could test Forex markets. I could test European markets. If you're in London and you want to test London Stock Exchange markets, you're able to do that. Nobody's typing any symbols in for me. Okay, well, I'll just make some up if I don't get any. But you have the ability to test whatever markets that you want. Okay. Still no markets are being tested. Okay. All right. Up here. If you just want to test some securities, you can either select from the list down here, which will allow you to test a huge basket of securities, or you can just type in a couple of securities up here. I'm going to go ahead and do Apple because that was the example I was showing. We'll do V out of a request for Abe. MSFT, we'll do Apple, Microsoft. I'm going to throw in USO. I haven't tested USO for a while. And, oh yeah, let's get another ETF DIA while we're at it. Okay. So, again, you can type in as many as you want up here. You notice as soon as I started typing the instrument list grayed out, that's because it's just going to take the ones that we typed in up here. Okay. All right, very cool. Now, MetaStock does have the ability to create a lot of system tests. By default, there's going to be about 45 built in for you. I have about 113 because I've created a lot over the years. It's actually really easy to go in and create your own indicators. So, for example, if you wanted to test something that was combining MACD with other indicators, it's actually really, really easy to go in there and kind of structure those. I'm not going to show you how because it'd take us a little past my lesson plan today. But I'm just going to go ahead. We're going to do Bollinger Bands. While I'm going through this list, I'm going to basically be avoiding anything that says optimized. And the reason is actually quite simple. Optimization, what it does is it takes many different values. So it'll test like a lot of different trigger points and stuff like that, which is pretty cool. And you do have the ability to do that in MetaStock, so you can figure out what the best stochastic oscillator settings are to actually trade or whatever. But because it takes because it's testing more variables, it takes a little bit longer to test. And I just kind of want it to run really, really quickly. For your information, when you test about the whole market, if you go back about a year or so, you're going to be able to do that probably within about 30 minutes. That's to test about 6,000 instruments. So it is capable of running through a lot of data. It does take a little bit of time. Okay. It also depends on your internet speed because it goes and collects all the data for you. You don't have to worry about like data maintenance issues and that kind of, or like downloading data and that kind of stuff. But mostly it's going to be processing speed and internet connection that's going to dictate how long it takes. I think that's plenty. I just have selected all the ones that I want to test. And the reason I selected the ones that I did, make sure I got the MACD one in there. I did, okay. The reason I picked the ones that I did was number one, I wanted to make sure that we weren't doing any optimized tests, again, because it takes a little bit more time. And number two, I wanted to make sure I was selecting just ones that I know are built into the product for you. Okay, cool. All right, so here we're going to say use long trades or short trades. I'm going to go ahead and test both. Obviously, if you only want to test going long, you could. You could test only going short. You just change the option up here. I accidentally tested back from 1980 last time I ran this, just because. But I'm going to kind of limit that a little bit. It did take about 6 minutes to run through. I'm not that great at entertaining you while we're watching a test happen. So I'm going to kind of limit that back to about 250 records, which is approximately one trading year. Okay, I'm going to test a daily basis. If you want to, you can kind of move that to whatever time frame you want. If you have the daily version of MetaStock, you could test daily, weekly, monthly, quarterly, whatever. If you have the real-time version of MetaStock, which I'll get to in a bit, it'll allow you to test like the intraday periodicities as well. Okay, just to show you what I'm doing, I'm going to go into the trade options setting right here. Under account, there's a couple of different options here. I think it's important for you to understand what we're going to do when we're going to go do that system test. We could do a points-only test. What that would do is every time it takes a trade, let's say it gets in at 10 and it gets out at 15, it just figures out how many points you won or lost with that test. So in that case of that trade where you get in at 10 and out at 15, that's a 5-point test, or 5 points, and it just calculates all the points gained or lost, it tallies them all up and gives you a points-only result. Okay, you can start with an initial equity account for your test. I'm going to start with $10,000, which is, you know, a good size to start trading with, and then you can also set how much you want it to buy. So every time you get a buy signal, you could say, well, I want it to buy 75 shares, or you could say I want it to based on a trade of, let's say, $750, or you can also have it trade on its available equity. So obviously, if I set it at 75% of the available equity, it allows me to test with compounding. And that may or may not be good. I'm going to go ahead and test with compounding. If I'm trading 75%, what that means is my first trade is going to be $7,500. My first hypothetical trade when it goes and does the simulation. And then as it goes through, if we grow that up to 20, then all of a sudden it's going to be taking a $15,000 trade. Okay, you can set these to whatever you want. I'm going to show you how to get a trial of this software product. I'd recommend you do that, but I'll play with it. But for now, just for the demo, I'm going to do 75% of my available equity. Okay. Over here, you'd want to come in here and put in your commissions. Commissions are a cost of doing business. You'll want to calculate that cost into your results. Okay. And under trading execution, basically this is realistic market prices. And what that means is let's say let's go back to the MACD example. Okay, we're waiting for that trigger we're waiting for MACD to go up above its signal line, and when it does, we're going to go ahead and buy into the market, right? Well, realistic, what it does is it waits till the end of the market, or the end of the bar, to go ahead and place a trade. Okay, because while a bar is moving, that MACD and that signal line is going to be moving. It might cross some point during the, let's say, the day if we're looking at daily bars, or during the hour if you're looking at hourly bars, and then the price might come back down and it didn't actually cross. Okay, so to avoid that problem, we can use realistic market prices. What it's going to do is going to wait till the end of the bar. Since the bar is closed, it can't buy on the close. It's going to buy on the open of the next day. Does that make sense? Okay. And so that's realistic. Of course, you can change that. You can say, well, I want to buy on the high and sell on the low. But I'd recommend you use realistic, because the whole point is to find what works. Okay. So let's go ahead and run the test. That's all. Just start the system test. And now what it's going through is it's going through and it's actually evaluating each of those systems. Which ones made money on our kind of randomly selected stocks? Which ones lost money? And it's giving us a kind of a result or a feedback in terms of, and it's already done. So let's go ahead and click on the view results. Okay. Oh, wow. Okay. All right, so over here, wondering if we had an option set. Usually it's a little bit of a distribution curve that starts right about here. This is fine though. What we're looking at here is the average profit. And these green bars and red bars represent the average profit of a trade, okay, for the system. Now, why is it average? Because we had 4 or 5 different securities. So out of our 4 or 5 securities, the best performing over the average was 10% gain. That's a dynamic momentum indicator. Okay. Down here, you'll see the MACD over these securities that we tested was about 2% is what it made per year. Okay. And that's on average. Okay. Now, with 4 or 5 stocks, the ability to look at kind of an average profit isn't as important because you just don't get a big statistical sampling with 4 or 5 stocks. But if you test 6,000 stocks And you know that over 6,000 or 7,000 stocks, the dynamic momentum index actually pulls in on the average 10%, and it kind of gives you a little bit more confidence in the actual system. Okay. In addition to that, once you kind of decide, okay, let's just kind of look at this in some of the ways that I would evaluate it. On average, we made about a 10% gain. Our best profit was about 3,000, while our worst profit was only about 224. On average, it traded about once a month. So does this fit for me? Well, yeah, it does. I just said I usually hold on to stocks for about 3 or 4 weeks. So 11 trades a year. Here in Utah, we have 12 months a year. Just kidding. I'm pretty sure that's everywhere. But here, that's less than about 1 trade a month. So to take 1 trade a month, non-leveraged, to make about 10% is pretty good, especially if you then look to leverage that with playing options or something along those lines, right? Our average trade profit versus our average trade loss was just a little bit 50-50, but our average profit versus our average loss was $1.89. Okay, so if I look at this, then I can view, and then when I click on view, what it's going to do is it's going to show us just the results for this dynamic momentum index. So we can see that it worked really well on Apple, not as good as on Visa, pretty good on Microsoft, not at all on USO, maybe that was an underperformer. And on the Dow as a whole, the DIA as a whole, it made about 4%. So now I can not only focus on what works, in other words, what indicators that it works, but I can narrow it down to the best stocks that it works with. So in this particular case, I'm going to go ahead and sort by net profit right here. I can see that Apple and Microsoft would probably be the ones that I'd look to trade this methodology with. Okay, and it had about a 30% gain on Apple. 16 trades, 9 winners, 7 losers. Great. Our average profit versus our average loss was $2. So every time we lost $1, on average we got $2 back. So we're starting to get an idea of how this system and how this methodology worked, at least for the last year. And to be frank about it, I'd probably test a lot longer of a time period. This is just to kind of show you what's going on. But you can actually test back to 1980 with Reuters data, or until Apple went public, whichever was obviously later. Microsoft did pretty good, made about $2,000 in profit, which is about a 20% gain. It had 11 trades, so you kind of get the idea. Actually, this one, profit and loss, was kind of terrible. 4 wins versus 7 losses, but the average profit for loss made up for it. So kind of get an idea of how well this functions overall. Is this clear for everybody? I don't see a lot of questions, so it makes me either assume A, I'm being really, really super clear, or B, I'm totally losing you. So if you do have questions, if you do need me to talk about something, please let me know. Or 3, maybe you're just bored out of your mind. One of those 3 things is going on. But in any case, let's go ahead. And let's go ahead and take even a closer look at this on Apple. So if I click on View right here, oh, where'd my report go? I thought I clicked on View. Oh no. They go on a different screen. Let's see. Oh, here it is. Okay, good. Okay, good. I thought I might just have to tell you what's on the screen for a second there. Sometimes they get lost on a monitor that's no longer hooked up, but we're okay. Okay. So here, obviously, we can see what our profit was. It was, again, 30%. Did it outperform buy and hold? Yeah, it was about twice as good as buy and hold over the last year. We would have made about, oh, wait, it was way better. We would have made 60% holding on to Apple for the last 1 year. So in this particular case, it does tell you exactly how much better. It was 18,515% better than buy and hold. Okay. The things that I like to pay attention to are total trades, again, 16. Okay. Average profit versus average loss, again, that's $2.01. 9 total trades. It's interesting that 4 of them were betting the stock would go up, and it did. And 5 of them were betting the stock would go down, and it did. Okay. This I don't pay. This is kind of cool. On average, we made about $543, where our highest profit was about $1,860. Okay, where our lowest profit was about $1,700. And remember, this isn't leverage. We're not buying options. We're just buying the stock. Okay. Unprofitable trades, we had 7 of them. 3 of those were betting the stock would go up and it didn't, and 4 of them were betting that the stock would go down and it didn't. Okay, so it kind of gives you an idea. This system looks like it would go long and short. Okay, now we kind of look at the averages. Every time that we take a loss, on average, $270. Our highest loss using this trading system and it not working for us was about $500. So the risk reward ratio, which is also reflected right here, is pretty good. It's 84%. Okay. One of the things that I do pay close attention to is this most consecutive losers. Because most consecutive winners, it doesn't matter as much for me. I can win every time. It does not affect my discipline to win and win and win and win. For me, losing consecutively has a higher impact on my discipline. So here where it says most consecutive, the most we ever lost in a row was 3 in a row. So obviously if you tested a few years of data, that might change, but that's not too bad. I think all of us can kind of, for the most part, expect and handle 3 losses of this size in a row. Okay? So this is the dynamic momentum index. There's a few things that I would look at in relationship to this. If I come up to the equity, this shows us what the, oh, I like this graph already. Okay, so this will show us exactly how it performed over time. Okay, and I like this already, and I'll tell you why in just a second. But you can kind of see what your drawdowns look like. It looks like for maybe the last 6 months it's been working really good, where it was a little bit sideways before that. Okay. So for the last 6 months, this has been working really, really good. It was a little sideways. Again, you're going to test more data when you do the free trial. But the thing I like about this methodology is the flat areas. And so obviously, if we're in the market, our equity is going to be constantly rising or constantly falling, right? If you're in the market and you're in a trade, your equity is going to go up or it's going to go down. Okay. If your equity line is going sideways for big periods of time, it's a measurement of efficiency. You're not in the market at that point. So in this particular case, if we look at our total time that we were in the market, it's I'm going to guess, like maybe three months out of the year, right? And so in 3 months out of the year, we made 30%, which I would argue is significantly better than being invested the whole year and making 30%, because it's a measurement of efficiency. If we're only in the market for a little bit of time, it frees up our money. Since our money is free, it's not at risk in the marketplace. Or you can be investing it somewhere else. So this is actually an equity line that I really, really like. Okay, and that's why. It's a concept, it's efficiency. If I get on the freeway after I'm done here, and it's when I get done here, it'll be 5 o'clock. It's going to take me about probably 45 minutes to go home. Whereas if I'm moving efficiently, because there's no traffic, it takes me 20 minutes, right? Which would you prefer? It's more important when you're talking about money. So, in any case, this is kind of I went on this for a minute, but this is the equity, the graph that I would prefer. I really like the methodology, so it worked well. Okay. So, what is this? Then, like, okay, how do we kind of take this back? Because I do think it's important that you understand the rules for why you're trading. Okay, what is this dynamic momentum index? What's the rules? What indicators are you using? I think those are important things to do, because I think if you understand why you're trading, you're not trading out of a black box. And I think it helps you understand maybe the weaknesses of your trading methodology. And I think it also helps you with your discipline when you're going into the market. Katerina, exactly. The whole idea is to figure out what methods, and they're usually indicator-based methods, work best for the stocks that you're interested in. Which methods work best on all of the stocks, which ones they work best on. It's about finding the right strategy for the stock, and I would argue for you as well. Okay, so if we want to take this, thanks for the question too, by the way. If I wanted to take this back, we were looking at Apple. I can actually kind of go back in here I can go down, and it was the, I wrote it down. Oh, I was going to write it down. I think it was the dynamic momentum index. Okay, so I'm going to go ahead and go down to, in our expert advice, I'm going to go down to the dynamic momentum index right here. I'm going to go ahead and attach that to the chart. I'm going to go ahead and click on OK. It's going to reload. And instead of giving me the advice about MACD, which it's giving over here, it's going to give me, oh, come on. I hope I didn't just crash. If it, Katrina asked another question. Anne-Marie, how did you like that presentation? You know that Anne-Marie presentation is our second highest viewed video. It has a ridiculous amount of views. It's second only behind our Steve Bigelow. I don't remember the exact count, but yes, stochastic momentum index Anne-Marie did. We haven't built a system test for it, but it wouldn't be too hard. And stochastic momentum index is actually in MetaStock. I'm sure if you wanted to, you could kind of have somebody create a system test for it. Or you could do it in just a few minutes if you understand a little bit about the programming language. Okay, it came back. I thought we had lost it for a minute there. Okay. But it did come back, or it's still thinking. Oh my gosh. Sometimes Omnovia kind of, okay. Sometimes I run into a little bit of an issue. I think it's Omnovia, but of course I'm going to say that, right? DMI1. Okay. All right, I'm just going to basically reopen the chart. Okay. There's a picture of Gerald Appel for you to look at while I restart MetaStock. It's normally a fairly stable program, but it does crash once in a while. And it seems like it likes to crash while I'm doing presentations. So, Catherine, it also looks like you're using MetaStock. Katrina, I'll stop calling you Catherine. Thank you for that. Okay, I'll call you Cat. Okay, let's go ahead. We were looking at Apple, right? Let me open that up again. What I'm going to do is I'm going to attach it to the expert advisor here, which it was the PS directional moving DMI. So I'll just find that in the alphabetical list right here. Directional or dynamic momentum index. So go ahead and open that up. Okay. Doesn't seem to like that expert. We're also doing some in-house testing of an upcoming release. I'm wondering if I fudged up my expert advisor. In any case, so the idea here is I'm just going to tell you about it now because I'm obviously going to run into some technical issues. But basically, the idea here is it's going to go ahead and tell you what indicators, how that methodology is calculated, and then you can go ahead and use it in your own trading. I think that one's actually kind of giving me a hard time, obviously. So I need to fresh boot my computer. Normally doesn't happen that way. Kind of puts me a little bit on the spot. It's okay. It's okay. The other thing that you can do is once you've kind of evaluated and found the method that works or the method that you like, one of the other really cool things in MetaStock that it'll allow you to do is allow you to test trading ideas. Or I'm sorry, scan the market. So let's say we really like that PSDMI and we kind of learned about it and we wanted to kind of use it to find methodologies in the chart. I'm not going to open that expert Hey, did you guys miss me? Testing? Yeah. I think my computer doesn't like Omnovia. I just my computer blue screened to death. So, in any case, let me get back here. And I think I don't know, that's pretty much what I wanted to show you. I'm going to completely blame Omnovia. I'm just getting my PowerPoint reloaded. I do have a special offer for you guys. And I think I was talking a little bit about how you can do scanning. So one of the things that's really cool about MetaStock is if you can actually scan for anything you want to, including the methodologies that are built in. So let me go ahead and scroll down. Bear with me for just a second. I had to restart everything because obviously my computer completely crashed. So, but it shouldn't be too bad. I've got everything running here. And let's go ahead and start the screen sharing. Launch application. Monitor 1. All right. Cool. You should see the. Let's just go ahead and start over, shall we? All right. The things I like about technical analysis are, because again, discipline is such an important part of things, it's good to have clear rules. Because you can always make excuses for why you believe the stock's going up based on, quantitative easing, or the Feds are going to raise interest rates, and you can kind of build your own story, unless you have some of the methods that we talked about with MACD are very, very specific. Then you have something that's objective. It's looking at what the market is doing. It's either looking at a trend following or maybe a reversal. It's looking at a methodology that kind of is looking at what the market's doing. It's totally objective. It's not subjective at all. So I love to trade using technical analysis because it allows you to remove those emotions that you have that are the wrong emotions while you're trading, those emotions of fear and greed. So with that being said, what I actually just didn't save either. So what I want to do is normally I don't do this as a trial because but what I'm going to do, there's actually two options. You can do like an extended trial where you buy 1 month or get 2 free. I'm just going to say if you want to try the program, you want to take a look at it on your own, I'm going to give you a free trial. And in addition to that, we'll include our Unleash Your Power MetaStock software that will actually show you how to use everything. And to get this, and I have a feeling I'm going to need to update this slide, which I am. Fortunately, I made some changes to the slides that somehow weren't changed when, but in order to get the free trial, and it's going to be a completely free trial for you, 30 days, you can try either version, the real-time or the end-of-day version. You're going to want to go to metastock.com/CTU, Cyber Trading University. If you have other questions, like why did Jeff crash and leave the session for 5 minutes or whatever, you can give us a call, 800-882-3040. You can chat online with us at metastock.com/saleschat. Really appreciate you guys hanging out while I came back in. Really appreciate your time here. Give the program a try. There's a reason it's been rated every single year #1 since 1992. It's just incredible. So give it a try. If it's helpful for you, you'll enjoy it. And if not, well, you're only risking a little bit of time. You're not even putting any money out to try it. So in any case, that's time. I want to thank you guys for coming. The differences between the two, Katrina, there's some pretty significant differences. Let's just go back here. The DC version is what they call, DC stands for daily charts. Daily charts just means that it's daily, weekly, monthly, quarterly, annually, daily and higher basically time frames, and it updates every hour. Whereas RT stands for real time, and it updates real time throughout the day. Now, since it's a free trial for you, which again I don't normally give out to people, but we're going to have a crash special, I guess. But since it's a real-time trial, since it's with the real-time trial, I'd recommend you try that. It's totally real-time. Everything kind of updates real-time. You'll pay exchange fees if you want real-time, otherwise it's like a 15-minute delay. But there's a huge difference in real-time in the fact that it also includes a product that we call Zenith that we didn't even talk about today. But if you like to look at news or fundamentals or unemployment reports or anything that has to do with macroeconomics, the product Xena is really, really cool. It's actually a white label product we get from Reuters. Reuters spent about over $1 billion on creating it by now. And it's a product that they, if you know much about Reuters' business model, they created it to compete with Bloomberg. Reuters is a 19-point-something billion-dollar company a year, and 90% of that revenue is selling real-time data to banks and institutions. So they spent $1 billion to kind of compete directly with Bloomberg on this really, really awesome news, analytic, real-time screening type of program. And we just include it with the trial. So you can take a look at that too. So since either one of them are free for you, I'd recommend you try real-time because you can always decide you want DC later. All right, cool. Well, I'm going to go reboot my computer again and just make sure we don't crash again. I want to thank you guys. If you have questions, reach out to us. If you want to talk to me, give me a call. And thanks for coming in.